Let's look at a very, very interesting ETF. First off, read this disclaimer carefully. We will look at the IPO market in this video. Okay. It is in the financial services, global IPOs. Here you can see the distance from the 52-week low, basically at all-time highs. It's the Renaissance International IPO ETF. IPOS is the ticker. A very good performance. Here is some of the seasonality. You can see that we are, currently in July. We don't have that many years, but the data we have suggests that there usually is a very strong rally into August. But then you can see that it definitively gets much weaker later into the year. So let's actually look a bit at the charts here. One of the first things I did, these are the weekly data points, all the data, is that I did find some basic cycle patterns. Rise, decline, rise, decline, rise, decline. So basically we are, which is in line with what we saw when it came to the monthly seasonality, expecting some weakness heading into after August. It makes certainly a lot of sense based here also on the cyclicality, because there are some clear major cycles here. Okay, so there's been, 3 major rallies before, here, and here, and you can see that the current, the fourth rally is completely different. It is extreme, very, very extreme. Very euphoric. We have done a lot in a very, very short time. I mean, even during this rally here and here, we tested the 10-week moving average here as well. But here, we haven't even touched the 10-week moving average. Just basically rallying off the 5-week. Of course, from a purely chartist perspective, this is bullish. The bulls are in control. But ask yourself the question, if you were to put on a new position here, would you be comfortable being bullish or bearish, This looks to me a bit too euphoric. Even though I am bullish on IPOs, it's just that there's everything in moderation. The correlation with S&P 500 is 46%, so there's a positive correlation, but it's lukewarm. The RSI is potentially showing some lower high here, possible bearish divergence. I'm not too sure how much we should read into the accumulation distribution line. It looks a bit weird. Let's go to the daily data points. Okay, so the thing about RSI, is that just because something is overbought does not mean necessarily that it's a short in and of itself. You need to look at multiple indicators. So let's say that if you are overbought, that's a risk. It makes it at least more risky to put on a long, bullish position. But then you add more indicators. So, we are very overbought. That's an issue. But then again, you see that we are very far away from the moving averages. Because over here, we are overbought, but we still are relatively close to some of the moving averages. The intermediate terms, like the 20-day moving average. But here we are just blown past all of them. And if you were to make a trend channel, we've blown past everything. It is just really, really excessive. Very, very excessive. Here again, the accumulation distribution line is just a mess, so I wouldn't read too much into it. The problem is the volume here for this ETF. It is a bit limited, but you shouldn't exclusively look at volume when picking an ETF. You should also look at just what does it give you exposure to. But the volume determines how you buy it and how you trade it. It doesn't make any sense to day trade something like this. Let's look at some additional data. Yeah, there are no options available. That makes sense given that the volume is limited. It is shortable. Here you can see the performance gain. I mean, the year-to-date performance is 29%. That's really, really good. So the gains are definitively very good. Here you can see some trend lines, and we have just exploded beyond them. If you look a bit deeper at ETF, here you can see the expense ratio, 0.80. Let's look at some of the dividend data. So the PE ratio is 30. So when compared against its peers, it is literally has the highest PE. So that's, you know, it's no value play, okay? So yeah, it's a bit risky if you want to put on a bullish position here. At least there's like additional data now suggesting that it could be a problem. The dividend yield, 0.17%. So basically, there's no dividend incentive to hold on to this. So it has the highest PE and the lowest dividend against its peers. That's, you know, an issue. Let's look at holdings. So you got Xiaomi, SoftBank, China Tower, Invent Biologics. So a bunch of very innovative companies. That's good. You can see some recent IPOs here. TeamViewer, I've used that one a lot. Good app. Let's look at the breakdown. So you can see that quite interestingly, there's quite a few large caps. You might expect, you know, an IPO ETF to have a bunch of small companies, but in this instance, I am very surprised actually that it's 80% large cap. I expected a lot more small cap. The regional breakdown actually dominated by Asia. That's also a bit of a surprise. I expected USA. USA here is America is. I mean, is America even here? Asia Pacific. Well. It depends on how they categorize it, I guess. Here you can see the country breakdown. This is really interesting. I do not actually see here United States. So it seems like this is one of those IPO ETFs, which is ex-USA. Yeah, certainly seems like, yeah, because you would expect. But that's interesting. That's as far as diversification goes, getting exposure to some of the more, I mean, the IPOs outside of Silicon Valley, this is great. I mean, so I would actually count that as a positive as far as, you know, getting that diversification. Let's look at fund flows over, let's say, the last year. Certainly been an increase in fund flow over the last 6 months. Recently seen a bit of a pullback. Yeah. Let's look at the ESG. That's something that's become popular. Very low ESG score. Yeah. Okay. So to sum up my take here on this ETF, long term I am bullish on IPOs to an extent. The problem with IPOs is that there's been a lot of talk about the valuation of IPOs. Many of them are called unicorns. It's been relatively easy to get access to money. So there's been some bubblish factors to this IPO space. So that is of course a risk. We did see with this specific ETF is that we are quite overbought. The valuations, distance from the moving averages, you could make a very strong case. Also, when we look at the seasonality, monthly, and the cycle patterns, that we are very much due a pullback. Hence, looking at the coming weeks, I would, if I was forced to put on a position that I must hold for like 2 months, I would actually feel more comfortable being short this ETF than being long, simply because it's been very excessive in one direction. These moves are just not sustainable. Even though currently, as we speak today, bulls are in control. Even yesterday, when the market was weak, the bulls rallied a bit more. But yeah, I would think a bit more like a contrarian in this case. Let's look at the US 500, the futures, what's happening in the US of A. Okay, so yesterday was a very interesting day because we did initially have this very breaking news. Citigroup, JP Morgan rise pre-market on Q2 reports. Wells Fargo drops. Okay. So we did have this very strong rally initially yesterday, which was challenging these levels back here, which would actually be a very strong sign if the bulls were able to push above it, but they were quite firmly rejected. So that's interesting. The bears, they did come back with, not with a vengeance, but they kind of shown that they are here. We also heard that some of the central bank officials, they were clear that you know, if the market continues to improve, they do not need to support the market, which of course makes sense. You know, the market is recovering, hence it doesn't need help. That also seemed to have spooked the market a bit. We did especially see, well, we'll be able to look at it soon. So you can see the S&P 500 today, a little bit of a pullback, but definitively something to watch out for. The QQQ, that's the Nasdaq. This is a bit of an uglier reversal candlestick. I mean, it has been seeing a very excessive move. So even though the IPO ETF, it went up yesterday, it makes, I mean, they are due a pullback, just a correction. I'm not talking about like a crash and make new all-time lows. I'm talking about at least maybe pulling back to like the 50-day moving average, just some normal to be expected seasonal correction. Because the big problem with euphoric rallies is that they can very quickly distort the market. Okay. But one of the most interesting things that happened yesterday was actually Tesla. So Tesla, of course, I mean, I talked about it before, it's been euphoric as it gets. Extremely excessive move. Yes, I'm bullish Tesla, yes, but everything in moderation. We have a lot of time ahead. It is as if Wall Street is in a different time space, you know, that even though time is going normally for us, in Wall Street, they are like in year 2020 or something like that, 2022. I mean, it is like they are way ahead. This move is just so accelerated. Yesterday, there was a very ugly reversal pattern. And Tesla, it has been very excessive, also very due to pullback. So this was to be expected and healthy. Let's look a bit at Amazon, also one of those stocks that if you look at the weekly data points, and look at the longer history, it usually has more irrational moves, rally, pullback, and then it just went ballistic. And now we're seeing a bit of a pullback. So there are many of these stocks that are very much due pullback. Netflix as well, seeing a bit of an ugly candlestick. So basically, we are seeing in the market now that there is more profit taking after extreme rallies, and I would be surprised if we do not see that in IPOS, the Renaissance International IPO ETF. A lot of rally in a very short time. Yeah, I would feel more comfortable being bearish than being long at this specific point. In the same way that it makes sense to start to become a bit contrarian down here, it makes sense to also become a bit contrarian up here. Of course, my slogan is, don't fight the trend and may the trend be with you. Having said that, there is a good saying, and some of the greatest investors have said it, that they don't want to nail the bottom or exit at the top, they want the beef in the middle, and that's something to think about.